Well, I guess you could infer that if they've decided to defer the IPO or sale of Baker Hughes, that maybe they don't need the money just as quickly as perhaps some might have anticipated. But they only think they're doing that because Baker Hughes stock had gone from 35 to 25, so now is just not really the right time. There are points, I suppose, that you could say, look, maybe things are starting to bottom a little bit, but the big picture, GE is juggling a tremendous number of balls here, and it's not clear that the management has a handle on all the moving parts. They seem to be fighting fires as they uncover things, so I don't think you should take a ton of optimism away from her commentary or presentations. I mean, it's really just the same narrative that they've been espousing now for the better part of several months.
Right. United Technologies CEO has said that he is now thinking of breaking up the company. Does that open any new possibilities in terms of what GE could sell or how businesses might be combined if there's a breakup on the United Technologies side and there are assets that could be combined with GE?
Well, UTX really has nothing to do with GE. GE and this whole notion that maybe they separate was put out there, we think, as a deflection from the company's fairly serious challenges. The reality is GE cannot separate. It's on the hook to back 100% of GE Capital's bonds. It has over $30 billion of underfunded liability. The SEC is investigating their accounting. The Department of Justice is investigating their ownership of a subprime mortgage company they owned prior to the financial crisis. You can't just separate the company. You'd have to refinance $150 billion of bonds plus, untold, uncalculable liability. It's just not going to work. It's a nice narrative. It's just not possible.
I believe the Wall Street Journal used the term rot in its article. Is that what you saw there?
Well, GE has been brushing things under the rug and leveraging aggressive accounting for the better part of several decades. And one could infer that the prior management basically did this to drive the EPS up, or the adjusted EPS up, as much as possible, to pay themselves as much as possible. So sure, I mean, in that context, that's just not great. It didn't serve the interests of shareholders. And since the cash flow has collapsed, the dividend's been cut in half, we think there are risks it gets cut again. And, the profit outlook has been severely curtailed. We could be facing a multi-year power downturn when just less than a year ago, the company was going full throttle, talking about how great everything was. And now today, the world looks completely different.
John, you were cited in the article, and you said essentially that GE for years has been selectively disclosing the information they want to give out to the analyst community, to the Wall Street community. The article itself calls it a success theater. When I was reading through the article, the term that came to my mind, and this is going to be pretty damning, is con man. This notion that you're putting forth this sort of facade of something that doesn't quite exist. What is your take looking back on what happened and what Jeff Immelt did? Was he lying to Wall Street?
I think in the big picture, I can't say for sure that he was lying. I think there's a lot of parties that are culpable here, including the board of directors. What have they been doing for several years? I would say to you that overall what the company was propagating was simply all of the positive narrative without balancing with the risks associated with a company like this. And as we know, the stock market's risky. Every company is risky. Nothing just goes up in a straight line or has the kind of positive narrative that GE has been espousing. And sure, the information they provided was one-sided. They made it overtly complicated to dissect the financials. They compounded the complexity on purpose so people wouldn't look at the details. And now, unfortunately, they're paying a bit of a price for it in terms of Wall Street really just not acquiescing to their story or their party line and simply saying, great, well, now everything's fine and dandy the way they seem to be suggesting. It's not fine and dandy. There are several challenges, and they have to really, I think, come clean, both on accounting and several other factors. And thus far, we remain to sort of see what the upside is going to look like.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.